Time now for Futures in Focus. Now, commodities are fresh off their best quarter since 2016, and today we're down. They're starting the fourth quarter with the worst drop for copper since March, sinking more than 5%. Oil also falling out of bed here, 38 for crude. Joining us now for more, Mike McGlone, Bloomberg Intelligence commodity strategist. Dollar not really doing that much. Equity markets pricing in some kind of optimism here. So what's leading the commodity market lower?
I think it's a little bit of mean reversion, as you mentioned. It was a really good quarter. Copper was the key one I was worried about. It was up around $3 a pound, dropping a little bit. But the big problem in commodities is crude oil. Oversupplied, demand's not coming back. But good thing, like for the Bloomberg Commodity Index, it's only a third of the index. And then we have the other sectors, the metals. That's the key sector I think see potentially following gold, just copper giving a little back today.
Gold's up again today, so is everything losing out against gold? Talk me through the sort of the gold versus everything trade.
Well, that's been the case for quite a while, but I think what we're seeing now, guys, gold is pulling things along, like the metals. The key thing, the way to look at gold is gold going up, or is it in that value of that currency going down? So you can look at gold this year as basically the dollar's dropped 20% versus the value of gold. So I see gold pulling copper along, not so much today, but in the bigger picture. And in the future, I see metals as like the best sector to really continue to appreciate. Like the Bloomberg All Metals Index closed at the highest level this quarter since 2013. Yeah, it's giving back a little bit today, but that's a pretty strong trend, particularly if the dollar's peaking.
Are traders playing commodities off of stimulus news?
To some extent. Copper, I think, is part of that, but that's kind of dicey because, if you think commodities and stimulus, you want to go for gold. More stimulus, more QE, right. Gold's the way to go, and that's why I'm so bullish on gold, because debt to GDP, QE, where are those trends? Only going up. Gold's going to have a bit everywhere, and any kind of dip. But then you look at crude oil, there's more supply. And what's the key thing about this? Technology is adding to that supply, reducing demand, and all that technology is increasing demand for metals.
That's interesting.
And do you expect that demand to increase? Oh, sorry, yeah. The supply to increase?
It is. Copper's kind of dicey. We have metals like nickel and, and some of the more, and silver related to the metals market, related to electricity. That demand's going to continue to increase as we see these trends in decarbonization. Look what we saw from California this week. They're going to reduce it. We're not going to be able to have internal combustion engines. China's going decarbonization. All that means reduced demand for petroleum, and more demand for metals, most notably copper, silver, nickel, and then, of course, gold's doing well on the whole macro situation. So I see the metals as a place to be in commodities in the future.